Hello, good morning and welcome to this delayed edition of Buy Now, Sell Now. You're watching ET Now, of course. I'm Varun Hiremat and along with me is Karunya Rao. For the next half hour or so, we'll get you up to speed with some hot stories in the market. Let's begin with the BNSN stock cloud to get you update with what's trending today and what's really featuring on the charts in terms of seeing larger interest and volumes. Bajaj twins, both of them, Finance and Finserv. Yesterday, everyone thought these stocks were going to crack badly today on the back of weak results. But the bullish commentary that came during the call seems to have neutralized that impact, and today both these stocks are soaring away in trade. Havells today, the top gainer, up I think around 8 or 9%. What a show from them in Q3. Huge growth in revenue and margins. GMM Pfaudler, another company which put out earnings yesterday, outlook improving. Of course, that EU transaction still underway, but the street still being a bit cautious, and that counter under a slight bout of pressure earlier this morning. We then have HDFC AMC on the back of results as well. We then have Bajaj Auto, which will soon be declaring its numbers. We have Imami, which has received an upgrade from various brokerages and targets now as high as 600 rupees for that stock. We then have a ABFRL and a Kirloskar oil engines as well, seeing a lot of interest today. So that was the cloud for this morning. Over to you, Karunya.
Right. Well, it's a historic day. We have SENSEX breaching that 50,000 mark, and there's a lot of cheer on the Lal Street. Let's talk markets and stocks then. Bring on board Ashish as well as Kunal, who've been waiting by. Good morning, gentlemen. Kunal, I'm sure you must be equally enthused by the way the markets have moved up, breaching that mega milestone of 50K for the Sensex. Tell us how you're reading into the chart for the benchmark index, and if you could also give us your picks for the day.
So good morning, Karunya. I think it's a fabulous day for the markets and for all of us, because I think climbing the Mount 50K took a lot of toil. The last 1 year has been extremely tough for I would say overall for the globe. But I think the fact that the Sensex has cleared this 50,000 mark, I think it just about gives a lot of confidence and cheers to a lot of global investors as well as local investors. So I think congratulations to all the viewers and all the bulls who have been consistently bullish on the indices. Talking about the near-term charts, I think it's again one of the routine days for the index, which you've seen today. 100 points plus on the Nifty, 200 plus points on the Bank Nifty, and a very strong recovery. Overall, from that Monday sell-off, or I would say marginal correction, which we had seen, it's again a reinstating of the fact that the indices are into a strong uptrend, and corrections have just lasted for max a couple of days, not more. So I think that's how you can probably summarize the strong bullish uptrend which you've seen. In terms of specific names, I think there are now a couple of stocks which are inching towards breakout. So it's a mix of large cap and mid cap names. The two stocks which I'm suggesting as a buy, first one is EID Parry. Again, a very interesting chart. In fact, in the morning show as well, I'd given a buy call on EID Parry. The stock is already up some 4.5-5% odd. But I think it's now completing a very strong bullish triangular pattern breakout. And it's an exceedingly strong chart, because when you look at it on the slightly longer term time scale as well, there are multiple bullish patterns which are getting broken out. So both on the short-term time scale as well as on the long-term time scale, I would believe EID Parry should do exceptionally well for itself. So I'm expecting the stock to move up significantly higher from current levels. A positional call, targets of 400 and stoppers to be kept at 340. The second is a buy at Tata Chemicals. It's very, very interesting because it's again one of the few Tata group of stocks which has done remarkably well, other than Tata Motors and Tata Consumers, etc. But when you look at the charts for Tata Chemicals as well, it's completing now a bullish flag pattern on the daily charts. The momentum into the stock is exceedingly high. We've seen very strong option activity as well for Tata Chemicals. So on all of those fronts, it indicates that the stock is now ready to go and maybe cross even that 580 to 600 mark as well. So again, a positional play, a buy on Tata Chemicals for a target of 600 and stoppers to be kept at 525.
Two very high pedigree management stocks from Kunal, EID Parry, of course, and then Tata Chemical. Ashish, good morning. On this historic day, what calls do you have for our viewers?
Yeah, a couple of A calls which I am having. Both companies are starting from A. My first stock is Apollo Tyres. I'm very bullish on tires stock per se because whatever the import was happening by global players, it's not happening now because of anti-dumping and other issues. So domestic tire companies are going to really do well. So Apollo Tyres, being a leader in replacement market, will continue to thrive in many more quarters to come. And I'm expecting that in this quarter also, once numbers will come, we are expecting very decent growth in Apollo Tyres. So this is the reason all tires stocks are getting re-rated, and Apollo is one of the best bet in my view here because they are present in OEM segment as well as in replacement market. I'm expecting 225 crore PAT also in this quarter from Apollo Tyres. So this is a good buy from here. Another low risk idea which I like is Ashok Leyland. In my view, the kind of momentum that we have seen in Tata Motors, Ashok Leyland is still to do a lot of catch up, and the kind of growth they are showing in the last few months, and particularly in LCV segment, this phenomenal. So Ashok Leyland is going to be a buy, and I'm expecting 20% kind of upside in the next 6 months.
All right, gentlemen, thanks for your picks. We request you to stay on with us, and to our viewers as well, we would like to say the same. We're slipping into a break here, but we'll address viewer queries when we come back. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. Time to start off with our viewer queries for the day. First up is a Twitter query. Sekhar writes to us that he bought 2,000 shares of City Union Bank at 166 rupees price point. He wants to ask our experts if he should stay put in that investment. Kunal, he's already made about 10% worth of gains on this investment. What would be your recommendation going by the charts? He is looking to stay invested for the long haul.
The viewer can stay invested on City Union Bank. It has a very, I would say, very strong and a robust history as well. The stock has been one of the few I would say mid-cap banks which had done exceptionally well. I remember, I think there was a time when the stock had risen almost 10x from 20 rupees or 25 rupees in 2010-11, I think, to almost 220 to 40 levels. And from there on, how the markets corrected, even the stock went through a correction of more than 50% plus. But it's a stock which has a very strong pedigree, which has a very strong price history as well. I would looking at even the short-term charts. So there is also a bullish flag pattern getting formed for City Union Bank, and flag pattern breakouts generally are very strong, robust indicators of breakout on the on the longer term direction. And when the breakout happens, the stock starts to retrend itself. So I think on the backdrop of this and the recent history as well as the long-term chart pattern, I would recommend a hold on City Union Bank, and over the next maybe 6 months to 1 year, you can expect at least a target of 220 to 225 on City Union Bank.
Thanks for that, Kunal. Ashish, how about you? How are you assessing the fundamentals of a City Union Bank? It was quite a good performer last year. Of course, that's ebbed off a little bit of late. Do you think the prospects for this one look bright?
Yes, I think this is one of the strongest South India-based bank, and primarily focused towards the retail lending. So retail and MSME lending is something which is their strength. And this is the reason, compared to other PSU banks, this bank has really done well, because from a low of 110, now stock has already smartly up to 275 odd rupees. My short-term target for this bank is going to be 200 rupees, but in long run also, you can remain invested in the bank because, first of all, they are having one of the best capital adequacy of 16%, as well as 14 to the retail side, and good collections they are witnessing. So I'll also echo the same, that you should remain invested.
So, retail focus, good capital adequacy, good collections, very limited negative insights one can offer about City Union. So you can stay invested. That's the verdict. Let's move on to a stock that's gotten very expensive, and I think that's what the query revolves around. Rahul Basin of Kolkata has written to us, invested at IndiaMart at 6,200, still made money. Today he's sitting at nearly 75, 7,600. Should he book profits or continue to hold? Kunal, what do you think on that chart? Are things starting to look a bit exaggerated? Are all the indicators still intact? What would your advice be?
A bit exaggerated. You are right in mentioning that, Varun. So yes, the recent rally for IndiaMart has been just about breathtaking. I think especially in the last 2 months, from 5,000 levels, I remember clearly that the stock was at one point at hit even that 8,000 odd mark. So it's been a very ferocious rally for IndiaMart, almost a 60% jump in the last 2-3 months, and which is why I think many of the indicators have got back into the overbought territories. Now there could be two scenarios. One is that either the prices go through a correction phase, maybe a retrace, this 3,000 point gain, there could be retracement of at least 1,000 point to 1,200 point, which could be a normal course of action for a stock price which is into a strong and a ferocious uptrend. Or the other case could be that how the stock when go through a time-wise correction, like what we saw in the last 4 days. In the last 4 days, I think if I'm not wrong, the stock had corrected from 8,000 odd levels to 7,300, 7,400 kind of a territory. So you might have the stock going into either a time-wise correction or a marginal price-wise correction. So if you bought at higher level, if you bought at lower levels, you can continue to hold. But what you can, what I would suggest is what you can do is you can try and use these corrections, either time or price-wise corrections, as now it pans out for IndiaMart, as a good averaging opportunity.
Okay, Ashish, how about the fundamental view on IndiaMart? What would you recommend to our viewer?
I'll also advise that 8,000 rupees you should exit from the stock because you have made enough money, and the 23,000 crore almost market cap, the stock is surely expensive. Only one thing which is driving the stock is FIs are continuously increasing the stake in the company. If we see last 4 quarters, they have doubled their stake from 10% to almost 22%. And this is the reason why valuations have gone at such levels. So my advice will be at 8,000 rupees, you should exit from the stock because limited upside is left. After that, instead of this, I'll advise to buy Root Mobile, which I have recommended earlier also in your shows. And in my view, it can give you better returns if you buy Root Mobile at this price.
Thanks for that, Ashish. So IndiaMart seems to have gotten a bit too expensive. According to both our experts, Root Mobile is the suggested alternative by Ashish. On that note, thank you to you both for joining in this morning and sharing your perspective. Always great to get your insights on where we stand with these viewer queries. But let's move on. We also recently caught up with Vinod Gupta, who's the managing director of Dollar Industries, and tried to understand how the year has gone by, what the emerging consumption trends are that are expected to follow in 2021, and of course the outlook on that company. Let's listen in.
I'd like to understand how was the year gone by, and given the trends that have played out, what are your expectations for 2021? If you could talk to us about how the trends in terms of consumption have evolved and what is the visibility going forward?
Well, it's known to the entire world that this COVID-19 pandemic has made the year 2020 all about learning and turmoil. The textile and the apparel sector is also, of course, confident of achieving the much needed growth in the year 2021, as the market will be on a revival mode soon, very soon. The emphasis has been, much emphasis has been given to the sustainability in the year 2021. Now, if you look at the India Business of Fashion report, Indian apparel industry is expected to grow in a double-digit mode to reach a USD figure of 85 billion by 2021. The main growth drivers for the industry will be rising urbanization, increasing affluence and aspiration value, and greater brand awareness, because you know that the entire, much of the now consumers are now online instead of offline because of this pandemic. Everybody is at the home, they are not moving out, they are not stepping out. So the entire scene has got changed. So now when the scene changes, ultimately the aspiration value, once you go online, that also changes. So there is a big change in the aspirational value of all the brands which are there in the market, either online or offline. Now the primary focus this year would be on innovation and the sustainability, which should contribute to the substantial growth of this industry and of course of my company as well.
Okay, that was, of course, a very interesting package with Karunya and Dollar Industries. So keep your eyes out on that one. But let's quickly address the BNSN quiz question and then we're done for the day. Just 5 minutes to go. Our question to you was, which one of these pharma majors has the highest percentage of revenue coming in from the Indian market, right? So your options were Lupin, Glenmark, Alchem Laboratories and Cipla. And the correct answer is Alchem Laboratories. So we have one person who managed to get that right today, Nagarjuna, and his Twitter handle is IamNagarjuna9. Congratulations to you, sir. Hearty one at that. Encourage you to keep participating in our quiz on a daily basis. On that note, we're timed out here, so goodbye from me and Karunya. Thanks so much for watching. Stay tuned to ET Now.